Hello, you're welcome to FinInvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 2 decades. So I want to talk about the fundamental analysis of this particular company, AIICO Insurance. Some individuals in the comment section requested that I should analyze the company for them. So since your wish is actually at my commands, I have to go ahead and analyze this company for the benefit of those who ask for it, for the analysis, and for the general viewers in the channel. So we want to start with the company's revenue. As you could see on the board here, the company generated a revenue of 191.772 billion naira. 191.772 billion naira in the year 2025. Then the revenue for the corresponding year, 2024, was 159.429 billion naira. 159.429 billion naira. Of course, this is an increase of about this 160, this 190, of about 30 billion naira increment in sales, increment in revenue, which is quite commendable. We now want to go to the profit before tax. All right. I'm skipping this because this is an insurance analysis. So they don't have these parameters. They call it different names when it comes to insurance companies, while other companies have something of this nature. So we now come to the profit before tax. The profit before tax recorded here is 19.883 billion naira. The company recorded a profit before tax of 19.883 billion as against 15.923 billion naira. So there is an increment of this 16, this 20, an increment of about 4,000, of about 4 billion naira, an increment of about 4 billion naira, which is somewhat remarkable. We move down to the company's profits after tax. So the insurer here generated a profit after tax of 17.862 billion, 17.862 billion as against 15.192 billion. 15.192 billion. This is 15, this is approximately 18. That's an increment of about 3 billion naira. Is still in order. We come to the company's total comprehensive income, which is 29.730 billion naira as against 17.696 billion naira, which of course is commendable. So we now come to the most important figure, the most important parameter in the entire analysis, and that is the earnings per share. All these other ones we are doing are very important, as I used to emphasize, but this is the most important value figure in our fundamental analysis here. So the company grew its earning per shares from 42 kobo to to 48 kobo. This rate of growth is just too tiny. All right, a difference of 0.06, 0.06 is almost the same figure. All right, and so the growth is not all that attractive. The growth here is almost negligible, because generally when we talk about company analysis, the most important figure is not just the earning per shares, but the growth, the increments in earning per shares. Growth in earning per shares will invariably signifies a growth in the share price, and a growth in the share price amounts to capital gain. All right. And so the growth here is not that encouraging. The company is almost like stagnated. Look at it. Just 42 kobo to 48 kobo is not something one could write home about. Now, we want to look at the other segments of our analysis, which comprises a skeletal, summary of the cash flow statement as well as the balance sheet. We are through with the profit and loss statements now. I want to go through to the other segment of the analysis. Let's start with the cash. The company has a cash position of 46.81 billion naira. This is the company's cash position, which is quite remarkable. It's encouraging. The company has cash. Imagine the company making a profit of 17.8, approximately 18 billion, and they are keeping a cash of, approximately 49 billion. I think that is okay. It has a robust, excellent cash management. The company can take care of his emergency expenditure without resorting to borrowing from the bank at an expensive interest rate. Now, we look at the company's equity. The equity simply means the company's total assets minus its total liabilities. So once you subtract the total assets from the total liabilities, you come across what is called the equity. And the equity here is 94.973 billion naira. 94.973 billion naira. And so this indicates the strength of the balance sheet. It tells us how strong the balance sheet is. So we now come to the equity per share. You simply divide the equity by the number of shares outstanding. That will give you 2 naira 59 kobo. This particular value is what is called the book value per share. The book value per share. And this value alone on its own may not really it's not all that significant on its own, but it's there for the purpose of comparison. You compare it with the company share price. The share price is 4.28 and the book value per share is 2.59 or 2 naira 59 kobo. So the difference between them will determine how cheap or expensive the company is. If the difference is wide, that means the company is expensive. If the difference is narrow, all right, the company is considered less expensive or cheap. Now we come to the company's market capitalization. It stands at 157 billion naira. And what's the market cap? It tells you how big or how small the company is. This particular company is a fairly big company. It's fairly big in the sense that it has as much as 157 billion naira, in market capitalization, and the shares outstanding is 36.6 billion. All right. So by the time you multiply the shares outstanding by the share price, that's 36.6 billion times 4 naira 28 kobo. That will give you the market capitalization we have at this particular point here. Now, we want to look at how we derived the PE ratio. For the PE ratio, you simply divide the company share price, recent share price, by the earnings per share. The earnings per share here is 48 kobo. All right. So when you do the division, you will arrive at 8.92. So the company isn't that expensive. It just, in the in a high single digit, it's a high single digit number. It's not up to 10, it's approximately 9. So we don't just conclude on this number alone. This number will serve as a yardstick, for comparison with other insurance companies in the same sector. That will show you how this company is, how cheap or expensive it is in relation to other companies in the insurance sector of the NGX. So you carry out a ranking, a comparison analysis, and this will serve as a guide as to how expensive or cheap this company is based on the ranking, with based on its ranking with other companies in the sector. Now, this is the kicker here. Personally, this is my personal opinion actually. I would give this company a neutral recommendation. You have buy, you have sell, and you also have a neutral recommendation. I'll give you a neutral in the sense that assuming the difference between this and this is wide, all right, maybe this if this were to be 60 or more than that, I can give it a buy rating. But the way it is, the growth here is so negligible to attract a buy recommendation. If you go ahead and buy it, it's still okay, there's no problem. And if you've bought it, you may not sell. I'm not saying you should sell, and I'm not equally saying you should buy. All right, definitely you may not sell, and you may not equally buy. So I'm just like my fingers are crossed here. That's why we are giving it a neutral, recommendation. Please, thank you for watching. Subscribe to this channel, like this video, and share it to members of your community so as to be able to obtain favor from the YouTube algorithm, and so we can reach out to many Nigerians with this message of investments in the Nigerian Stock Exchange. Thank you very much for watching.